So we're joined today by Slonee, who is a partner at a real estate firm in Kitchener-Waterloo and has vast knowledge and experience in all things related to real estate. So welcome, Slonee.
Thank you. It's good to be here.
I bought a new construction. I'm an end user or I'm an investor. Now, again, we live in Canada. We all hear this word tax and the tax implications. Slonee, is there a difference buying a new home or an investment property when it comes to tax purposes of HST, whether you are an end user and you're going to move into the house or whether you're an investor and you're looking at renting it out?
So that's a great question and a common misconception. Investors often feel like they have to pay additional HST on top of the purchase price, but that's really not the case. The way that most new construction agreements work is that the purchase price includes HST to the extent that you qualify for the rebate. And the rebate that they're referring to here is the residential rebate where you as an end user would be living in the property. So what you'd be looking at is a purchase price of $500,000. In this case, it's the maximum rebate amount of $24,000. So that's already built into the $500,000 price. So as an end user, your purchase price is $500,000. As an investor though, your end user, your price is $500,000 plus the $24,000 rebate. And then the process to recover the rebate after closing is that you apply to the CRA, you give them a copy of your 1-year lease, and then you're able to recover the $24,000. So at the end of the day, it's a wash. Both end user and investor are ultimately paying $500,000 for the same property, but the difference is that the investor has to be able to come up with the funds in advance, whereas the end user does not.
So at the end of the day, as an investor, you're paying the HST on closing, but you're able to recapture that HST. Now, how do you recapture that? Is it as soon as the deal closes, I just apply and I get it back? Or are there certain caveats that need to be met for me to get that money back as an investor?
So you can apply the same day as you're closing. You have a 2-year period to apply. The criteria is that you have to have a 1-year lease in place with an individual. So it wouldn't apply in a situation where the investor is doing an Airbnb business, but if the investor is leasing to an individual person and they're able to provide the CRA with a copy of that lease, then they would be able to recover the rebate funds. So you have to include a copy of your lease, a copy of your agreement of purchase and sale, your statement of adjustments, and then you're looking at a 2 to 3 month turnaround time with the CRA to recover the rebate funds.
One key point that always comes up when people hear the term HST in Ontario, it's 13%. So is this a straight 13% on top of your purchase price or pulled out, or is there a different formula that's used for this?
So the formula is a little bit different because the purchase price that the builder is using does include various HST components that do need to be backed out. So the purchase price the builder uses is a gross, and it does need to be backed out to reduce the rebate amount that's in there. So it's not exactly 13%, it is close though.
Okay, I found a great place that I like. It's not built yet and it's a new development project. I want to buy it, but it's not going to close for, 3 years down the road. My job situation might change, my family situation might change, but I really like this place. I want to buy it. We've heard the term assignments. What is an assignment, Slonee?
So an assignment is when you take your right in an agreement of purchase and sale and you sell it over to a third-party buyer.
Now, is an assignment clause or permission to assign a given in all agreements of purchase and sale?
It is not. So if this is something that you are thinking about, you really need to make sure that you have the right to assign your agreement as part of your original agreement with the builder. So if it's not listed there, you need to negotiate that during your cooling off period.
And are there any implications that I need to worry about, when assigning an agreement, or is it as simple as just, hey, John, can you buy my contract? Sure, John, I'll give you $100 for it. Here's your contract and that's it. Or are there other things to take into consideration?
There are costs that you have to consider as well. So if a builder gives you the ability to assign your agreement, there will be caveats imposed. So the builder will have an assignment fee that's applicable. There might be an assignment fee to the builder's lawyer as well. They might restrict your ability to restrict your ability to list the unit on MLS. You might have to find your assignment privately.
We've also all heard this term about now CRA or the government, if you're signing it, views you as a builder. What does that mean?
So this is going back to HST implications. So this is another thing that you have to think about when you're assigning. As an assignor, you will have to pay HST on any assignment profit. So the HST implications are related to the profit that's payable. If you are assigning the unit, then you'll have to pay capital gains tax.
So now I've found my pre-construction, whether it's a freehold, whether it's a detached house, whether it's a condominium. I've bought it, I went through interim occupancy, I've closed on the deal, I live in it. We've heard this term anti-flipping tax. Slonee, what is an anti-flipping tax?
So this is something new that's come in place as of January 1st, 2023. The anti-flipping tax is a prohibition against selling the property within the first year of owning the property. So what it is that, like, say you purchase the property January 1st, 2023, you are legally not able to sell the property until January 1st, 2024 without incurring any additional costs. So if you were living in the property as your residence and you waited 1 year to sell, then you would have an exemption and you wouldn't have to pay any additional tax. But if you were to sell in under a year, then you would be taxed as if you were declaring business income. So you would be paying tax at the full profit of whatever you sold for.
Now, does the anti-flipping tax pertain to all property types, or is it only new builds?
No, it applies to all properties Canada-wide, including assignments. So say you purchased a unit from a builder and in less than a year you were to assign the unit to somebody else, you would be responsible to pay the anti-flipping tax there as well.
Let's say I move in and I get my job transfers me to the East Coast or the West Coast. Are there any exceptions to this anti-flipping tax? Like, can you challenge it in any way with CRA?
You definitely can challenge it. So CRA's default position is that if you were to sell the property in under a year, automatically they're going to be taxing you as business income. They're not going to look into whether this was your principal residence. They're not going to look into intent. It's your responsibility to challenge and say that you qualify for one of the exemption criteria. And that criteria would be like employment relocation, death, insolvency, change of family circumstance. There are different criteria that can allow you to qualify for an exemption, but it's on your onus as the seller in order to prove that.
Is there the tax, since it is a tax, is it a percentage that you're taxed on, or how does it work?
So it's dependent on what your tax rate is. So traditionally, if you were to sell a property with over a 1 year gap, then you would be paying capital gains. Capital gains is that you are taxed on 50% of the profit.
At what rate? Whatever your tax
At whatever
rate is?
your tax rate is.
Great.
But with this anti-flipping rule, you're going to be taxed at 100% of the proceeds at your income tax rates.
Wow, so it's a significant increment then.
Yeah.
And again, just to clarify, so there's no distinction between a brand new property that I've moved into or a 100-year-old century home that I've moved into with my family. And now after 6 months, I just decided, hey, the markets went up, I want to leave and move on to something else. There's no distinction on age of the property.
There isn't, no.
Wow, definitely lots to consider when you're investing in a home, whether you are buying it for the long term or as a flipper, because according to the information that we have and what the government has put out, there definitely is some implications if you're looking at buying and selling it within a year. Okay, so we're all ready for closing. We've signed all the documents at the lawyer's office. We're ready to get the keys now. We've closed the property, we show up, and something doesn't work. What do we do now, Slonee?
So after closing, unfortunately, there's very little that can be done. So what we do is we encourage buyers prior to closing, make sure you do a final walkthrough of the property. At that time, test all of the appliances, run the stove, run the dishwasher, put something in the washer or dryer. You really need to test the appliances to make sure that they work before closing, because after closing, it's really a question of, well, did it work, did it not work? And the seller will often take the position that the appliance was in good working order at closing, and it's on the buyer to replace the appliance.
That's my job. A final walkthrough as a realtor. Generally speaking, you should always, at least one day, maybe 2 days before closing, have your realtor on a resale property do a final walkthrough of the property where you test everything out and make sure it works.
Can I throw one more thing in there? So
Yes,
in addition to testing the appliances, you also want to test the plumbing. So you want to turn on all of the faucets, flush the toilets, make sure that the water has good pressure, because again, after closing, there's very little that can be done.
So now once we've done the final walkthrough, a day or two before closing, and now what if it's a subjective thing where, a clause that we've put in says, the property is maintained in generally the same condition, but now we've done the final walkthrough and the buyer's saying, well, these things weren't here, or the grass is a little bit longer, or the gardens weren't maintained, or the scratch on the floor wasn't here. How do things like that work?
So those are things that you really do have to identify in your final walkthrough. If it's something like a scratch on the floor, a scuff on the wall, if the property has to be delivered in the same condition as when you made your offer. So if you had made your offer and then prior to closing, there's this giant scratch across the floor, the seller is responsible to have that fixed before closing. After closing, though, the seller could take the position that this was something that was caused by the buyer or by the buyer's movers. So it really comes down to a question of how do you prove that the blemish was in existence before closing.
So definitely want to bring any issue or potential issues to your lawyer's attention and your real estate professional on your final walkthrough. Okay, so we've got our keys and we're ready to go. We're ready to take occupancy of our new unit or take closing of our new unit. We've heard of this term PDI, or pre-delivery inspection. What is a pre-delivery inspection? What's its purpose and who does this?
So pre-delivery inspection is your first opportunity as a buyer to go into the unit and to make sure that the unit is exactly what you were expecting to receive. At the pre-delivery inspection, you will make sure that there's no scuffs on the baseboards, that the appliances are in good working order, there's no issues with the plumbing. The builder will give you a roll of tape in order to identify any of the blemishes. You will take any deficiencies and you will note them on a Tarion form. This is called the Certificate of Completion and Possession. The builder will have 30 days to rectify any deficiencies, and if there are any remaining deficiencies, that carries over onto a 1-year form.
Okay, Slonee, when I buy a new construction or a pre-build and something is closed, how do property taxes work? Because I've received numerous bills throughout the year, and then I also remember paying things on closing. So how does the property tax and billing work for new builds where the property hasn't been assessed by the municipality yet?
So the answer to this really depends on if you as a purchaser have taken occupancy before final closing. If you've taken occupancy, what MCAP does is that they require the builder to pay the property taxes for that calendar year. So the builder is going to receive the bill and is going to be responsible to make the payment for the bill, but really it's the purchaser's responsibilities. What you'll often see on your statement of adjustments is that the builder will collect the builder will collect the property taxes from your occupancy date until December 31st of that calendar year. And then in addition, the builder is also going to collect a further 1 year of property taxes. So for example, if you were closing in 2023, you will have already prepaid the property taxes for 2024. So when you get that property tax bill, it's really important to go through your closing report, find your statement of adjustments, and get in touch with your lawyer to make sure that you have not overpaid on property taxes.
Are there any other general tips that you have that buyers or sellers should look for on closing a deal?
Yeah, so you'll want to make sure that you update your driver's license within 30 days of closing. I definitely tell all of my buyers to make sure that you change all of your locks on the same day as closing, rather than going through and and redoing all of the locks. You can have your locks rekeyed. That's a little bit of a lower cost. You'll have to also update all of the passcodes on the keypads and the alarm systems. Make sure that you set up a rainy day fund, and most of all, budget for property taxes for the following year.
Thank you for joining the Ramautor Real Estate team with this information session. I would definitely like to thank you, Slonee, for sharing your time with us and sharing some great information with regards to buying, selling, investing, and things that really need to be taken into consideration. So thank you so much for your time.
So glad to be here. Thank you so much for having me.